Hello, I am the Stock Options Hero, and from here on out, I'm going to share with you stock options secrets that only the most successful option traders know. In my videos, you are going to see my secret options trading system that only a handful of people know. And as I'm sure you're well aware of by now, options trading can be very lucrative. However, most options traders are not consistently successful, or even worse, lose money trading stock options. Trading stock options can be a high probability trade if done properly. Let me show you. Now, each day I will record a video where I play simulated options trades. So subscribe to my channel and watch my videos daily to learn how you too can be a successful stock options trader. Disclaimer: these videos are for educational and entertainment purposes only and does not constitute a recommendation to buy or sell any securities or stock options. Before I dive into today's stock options video, I have a small favor to ask. If you like this video or any of my videos, please subscribe to my channel and hit the bell icon so you will see my videos as soon as they are posted. This way, you won't miss out on any paper trading ideas. Tell me in the comments section which option trades you are looking at paper trading, and if you're lucky, I might do analysis on a ticker symbol from the comments section. All right, let's leap into today's video. All right, welcome back to day 2 of the paper trading experiment. So we're down $518.50 today, but I'm not overly worried. Let me explain why. So let's start with our biggest loser so far. So BMEA. So yesterday I knew it could have been a little premature, but let's zoom in here. So big parabolic move. Now we have a Morningstar Doji forming with the high of 36.68. I'm not worried. Like, if the price chart, or if this candle today closes in this shape of a Morningstar Doji, then that is traditionally a reversal pattern. So then I would expect a pretty substantial down move, at which point we should be doing pretty well in the trade. So not too nervous, right? So let's see, and we'll keep an eye on BMEA to see how it's doing, but not concerned at all at this point. Now, would have today been a much better entry? Absolutely. But it could have, the price could have just dumped as well. So that's part of the trading game, right? You don't know what tomorrow holds. And what some people will wait for is a bearish confirmation. But if the share price had dumped today, you would have missed your entry, right? So I'm not going for 100% of the move. I'm generally going for 70 to 80% of the move. And today, we're, 5%, 10%? Anyway, so by expiration, we probably will be somewhere in the area of this upper linear regression channel or lower. We'll see. So it looks like it was related to earnings. And they must have had strong future guidance. I don't know. I haven't listened to the earnings or even looked or researched it. I'm purely going off of the price action and technical analysis. So moving on to ITCI. Okay, ITCI is going against us as well. I won't get too concerned unless it closes above the 60 price level. I would be fairly surprised if it goes much higher than this upper wick from March 28th, or the day we entered the trade. I expect tomorrow for the share price to start reversing. So once again, we got in a little bit early, but that's also why we are going at least 45 days out. So we've got 51 days for the price level to reverse or snap back to this mean, which is this dotted gray or silver line, whatever you want to call them. All right, so AMD, AI, AUPH, yeah, not concerned. It's like less $50. I guess we can look at AMD real quick before we run our search for the day. Yeah, not much going on there. Fairly certain by expiration it should hopefully snap back to the mean here of 75.50-ish. So let's go into our scan for the day. Remember, stock volume $1 million, stock price $10 or more, option volume of 200, open interest of 200. Okay, so we've got 397 results. We'll save it as 2023-03-29. You can save it as whatever you'd like. That's just the naming convention I've chosen to go with. Okay. Then going to our charts, I've linked my watch list to my TOS charts. So what I like to do is I'll just click on the first symbol. I'll sort by implied volatility, where the stocks with the highest implied volatility are at the top, and goes descending all the way down to 0, I guess. All right, so FRC, nope. Remember, we're looking to take short positions only at this time. Oh, you know what? We forgot to look at SPY. SPY. So, as I predicted yesterday, we're probably going to retrace up back around the 405 price level. Maybe, I don't think so, maybe the 415 worst case scenario. Generally, I wouldn't be putting on positions right now until SPY was look like this, or like this, or like this. But I wanted to start getting these videos out, so while not ideal, this way you can start getting some exposure to this strategy, so that when the market conditions are more in line with ideal conditions, then you'll be better practiced with this paper trading strategy, to where you can hopefully be ready to place a few trades on your own without having to refer back to these videos. So realizing any trades we place today may go against us in the short term. And we always run the chance that we are exiting the downward trend and it may be channeling sideways, or we could be entering an upward trend with all the macroeconomic picture right now. Not too concerned with a reversal of the overall market conditions. So I think we're going to be heading lower in the near to midterm timeframes. So let's see. I switched back to the 1 year daily, which is my default time period that I like to look at. I would say a majority of the traders like and use the 1 year daily as their default time frame. So you want to use the same indicators and criteria that a majority of the investors are using when possible. So, okay. Looks like my guess is SPY may retrace back up around 405, 406. So we've got another $6 price movement to the upside. Not ideal for going short, but once again, this is for educational purposes only and is not a recommendation to buy or sell any security or option. Okay. All right. I like KOLD, even though it's a leveraged ETF. If this were a stock, I would strongly consider putting on a short position. I want to be a good example and not violate my trading rules of trading reverse or leveraged ETFs, so I'm just going to skip it and be a good example for you. Okay. All right. AUPH. I think we're already in this one. Yeah. Okay. So we are short the 14 and long the 17. So for us to lose money on this trade, AUPH would need to close above $14 a share on expiration, which, looking at the overall downward trend, is unlikely. So because we already have a position on AUPH, I'm going to move on. So another rule is do not double or triple your position. If you've already entered the position, move on to the next trade. Don't place another trade. That's oftentimes when you can exaggerate your losses if it moves against you, right? I think of it like revenge trading, trying to get revenge on the stock. This stock doesn't care about you or your opinions. Just be impartial. Look at the chart. What is the chart telling you in the present moment? That's some of the best advice I can give. All right. BBIO. So, we're getting conflicting signals on the MACD and stochastic. So MACD tells me the momentum is increasing and price action may be increasing as well. Stochastic tell me it's in the overbought territory and we may be heading lower. So I would add this to, right click, and then add to my almost ready watch list so that I can go back to it in a day or two. Ideally, I would look for a double top pattern. So I may consider entering the trade around the $18.50 to $20 a share, in which case it would be considered a double top, which may indicate a reversal, because the psychological reason for that is if the stock wasn't able to close above the same price level multiple times, the stronger that price level / resistance level is. So if it bounces along multiple times, the stronger that ceiling or resistance level is. And it would take a significant amount of trading volume to break above it. So I typically like to look for a price level that has historically been significant. Okay, so we'll keep an eye on BBIO. Sorry, Coinbase. There's BMEA, which we are already in. Moving on. Nope. Remember, just looking to take short positions. And I think we are in AI. Yes, we are. And another way you can tell if you're in that underlying security is go to the trade tab, and it will show you a red position symbol for a short option and green for a long option position. So this means we have an open position, and if the symbol was in this column, it means we have an open order for that option. But because it's in this left column, it means we have an existing filled position on that option, right? So moving on. Oh, actually, maybe. I don't like trading GameStop. But, yeah, okay. Okay, FSLY. Here we go. Yeah, I like this, and I'll tell you why. So, we're at the linear regression channel, the upper band. You see that it's historically been in a downward trend over the last 12 months or 1 year, and it hasn't been able to significantly break above it. So we've got here's zooming in, we've got a bearish engulfing candlestick. MACD is in the overbought territory, getting ready to cross and head lower. Stochastic is overbought, heading lower. I don't like how the IV rank and IV percentile are so low, but the IV is 81. So as long as I can get my 10% return on capital, I will entertain the trade. So let's go to the trade tab. So zoom back out. So the high has been $20 a share. So let's see where the 20 strike is at from a delta perspective. So the 20 strike is at a 29 delta. Okay. So let's see if we sell the 20 and buy the 25. So at the midpoint, we can get a 54-cent credit. Okay, so buying power effect reduction. Let's see, here's my calculator. So 184 divided by, sorry. So divide the max profit by the buying power effect. 29% return on capital. Okay, so that's well above my 10% requirement. So 184, we want to spend 1,000 on the trade, which is 5 contracts. Just excuse me. Okay. 920. So we're risking approximately $920 to make 270. Max loss is 2230. I generally look at the buying power effect to do a quick calculation on my loss. I don't use the max loss, but even if you did, we're still at a 10% return on credit because you're dividing 270 from 2230. So I'll show you that. So 270 divided by 2230, 12.1%. Okay, so it's even doing it that way, it's still well within my 10% minimum. So we sent that to the market, the paper trading market. Okay, so it's sitting out there. And I'm going to keep this video shorter than yesterday. But, let's see, yeah. This one could go either way. MACD is above the zero line, stochastic heading lower, but this makes me a little nervous. I would like to see the MACD above 1.5. So it could go higher, but at the same time, when you're unsure, look at the linear regression channel and see how the price action has interacted with the channel lines in the past 12 months. So it's used it as a trend line quite a bit with a few exceptions. So it could reverse and head lower, or could break above it and head towards the top line. So you could add this to your almost ready watch list. Okay. Yeah. So this is an ETF that tracks Bitcoin, which highly volatile, and it's fairly new, doesn't have much history behind it. Looks like it launched in October of last year, so it doesn't even have a full year worth of data yet, so I'm going to hold off on trading it. Okay, Cinemark. Yeah, I don't like how the MACD looks. It's crossed and heading higher, so it could run up to the $16 level based on the linear regression channel. Now, if we do get a bearish engulfing, kind of like this candle right here, I may consider placing a trade, but it could go either way at this point. No. It's going to probably head higher. No. Yeah, you get this on occasion. Just click OK. Yeah, this is generally how fast I scan through these symbols, and I've placed thousands of trades, so I may be going too fast for you, and with practice, you too will be able to scan through symbols this quickly. Yeah. Because of where SPY is, I knew there wouldn't be too many trade opportunities. Okay, so Baidu, it's the Chinese Google. This one is somewhat interesting. So we're pretty close to the 12-month or 1-year high with the MACD not super high, but it's, and you can also look where the MACD has traditionally rolled over. So it still has roughly 2.5 more on the MACD to go. So it's possible it can head higher. Stochastic is telling me it could roll over soon. So I would wait on this one. Okay, AMD, we're already have a position, so skipping that. Okay, so looking at our IV chart, we're now at the search results that are above 50 on implied volatility. So I'm going to call the video at an end, and please take a moment to like, share, and subscribe. And I will see you tomorrow in our next video. Thank you very much.